Hello and welcome to this webinar on how should I review my investments. My name is Rohan Batra and I'm a financial wellbeing specialist at Hargreaves Lansdown. Today we'll be discussing uh, how you should review your investments, and there are really three key things to cover. Checking your objectives, looking at how your investments have performed, and revisiting the amount of risk that you're taking. Please note that this information should not be construed of as personal financial advice, but I do hope that the information contained in this webinar helps you make your own well-informed decisions. So let's just start by reflecting on what your investment objectives are and what your strategy is, and seeing if your investments are on track to meet your stated objectives. Because if they are, then there's likely to be very little work to do. But if they're not, then you may want to make some changes to your investments to make sure that they better fit your stated objectives to get yourself back on track. Furthermore, things change. Have your circumstances changed? Maybe your objectives have changed with them. And if that is the case, then that's absolutely fine. That's why it's really important to do a review to make sure that your investments meet whatever these new objectives are and fit your circumstances. If you're at all unsure about any of this, it's a really good idea to seek extra help, and that is certainly where advice can come in. Really objectively, it's important to look at how your investments have performed. So just looking at what return you have achieved, whether it's gone up, whether it's gone down, how much by, whether those investments still meet the amount of risk that you're willing to take. You may decide that actually, yes, it's gone up, but it's been quite volatile, in which case you may want to take down the amount of risk that you're taking. Equally, you might say that actually you could afford to take on more risk, and that's fine as well. It's a great opportunity to review where you are and make some of these changes. Consider whether you are adequately diversified. Do you have all of your eggs in one basket? Is it all in one type of asset, all in one sector, or is it spread around in separate assets and separate sectors across the globe, or somewhere in between? If you're not adequately diversified, then again, you can make a few adaptations, a few changes to make sure that you put yourself in that slightly better position. And then should you rebalance? So rebalancing is when you potentially sell out of some of the investments that have done really well and reallocate some of that money to those investments that haven't done quite as well. Why would you do that? Well, the original strategy that you might put in place may mean that you put 80% of your money into one core fund and 20% into one slightly different fund, for example. And that 20% fund may be quite a risky one. It might have done really well and might have grown quite a lot. So that by the time that you come to review your investments, you might find it slightly out of kilter. You might find that it's actually taking up 40% of your overall of your overall portfolio. That's great. That means that you have certainly made some good selections there. It's grown rather well, but that might mean that you're slightly too risky at that point, and therefore you might want to take down the amount of risk that you're taking a bit by reallocating some of that growth to that core fund. That's just a simple example, and there can be good reasons to not rebalance. You might find that actually, yes, you are in a slightly riskier position than you were before, but your objectives have changed and you might be quite content being in that slightly riskier position. So there are pros and cons of rebalancing. There are times when it's a good thing and times when it isn't, but it is an important question to consider as to whether or not doing that is right for you. So on our website, we do provide a lot of information to help you learn more about your investments, to help you make well-informed decisions as to whether an investment is right for you. Now, this screenshot here is from the top of one of our web pages with a few details on a fund. The name of the fund shouldn't matter too much. I've just taken it as an example. So The name of the fund is Schroder Managed Balance, then tells you the class, which denotes the charging structure, which I'll come back to in a moment, and then it tells you that it's in accumulation units. So accumulation means that any income received from the underlying investments. So if you've got shares and they produce a dividend, get an income, that income will be retained within the fund and reinvested for you automatically. Should you have it in income units, that income would be paid out to your HL account instead. It's then got the buy and the sell price. It tells you when that price is correct as at. And then beneath that, it's got a number of tabs. In the at a glance page, it will summarize the charges that you'll pay on this fund, and it will also tell you whether there's another class available, which is a cheaper or a higher charge. And if there's a cheaper version available, then you may opt to go into that instead. The at a glance page also includes information such as the investment objective, details on the fund and its top 10 holdings and so forth. Within the charts and performance tab, you can see how the fund has performed over a number of years, and you can also use that tab to overlay other investments so that you can do a comparison. In the research tab, you'll find information about how the fund has been constructed, why it might fit into your portfolio, how it's performed, and why it's performed as it has done. The analysis is just the raw data, looking at where it's invested globally, which assets, which sectors. The key features and documents include a number of regulatory documents, such as the fund fact sheet and the key investor information document, known as the KID. And the KID has details on the risks that you would incur as an investor investing into this fund. The costs tab has information about how costs affect the returns of your investment, and then you can click that button to invest now. There are similar pages available for the majority of investments, almost all investments on our platform. And that goes for the same as shares, investment trusts, and bonds, and so forth as well. So what do you need to know? There's quite a lot of information that we provide to you, and we do provide investment reports. We provide them 4 times a year, and a couple of them, the spring report and the autumn report, have additional commentary. Within your account, there's a portfolio analysis tool if you go onto the website, and that will let you know how your investments are performing and compare them to other investments held within your portfolio. And you can also use that tool to compare it against potential investments that you are considering putting into your portfolio as a whole. Please do read the commentary that we provide about your investments. That will help you understand how they're performing, whether they still fit within your overall portfolio and still marry up with your objectives and strategy. So here are just a couple of screenshots. On the left-hand side, you've got some details from an investment report. This particular client, you can see they have money spread in a number of different geographic regions using that geographic heat map. It's got different analyses on fund sectors and share sectors, and you can see how much in cash, how much in individual shares and equities, and how much in funds and so forth as well. So that's just an easy place to have a look to see where you're invested, and we put that information in those investment reports. And I'd strongly urge everyone to ensure that they are reading their reports. I referred to the portfolio analysis tab a moment ago. You can see that on the right-hand side of your screen. There's a number of different sort of sub-tabs. There's your holdings, X-ray analysis, performance analysis, and beneath those you've got different subheadings as well. So overview, underlying shares, and underlying bonds you can see there. This is a different specimen account. It's got, as you can see, different amounts of international shares, bonds, gilts, and so forth within it. But you can find a full breakdown of your portfolio within your account, within your analysis tab as well. And that can be a great place to get a bit more information. So what else do you need to know? Well, if we're looking at pensions specifically, you might want to know what you're on track for. So here is our pensions calculator. It gives you a rough idea of what you might expect to get in retirement. You can put in some of your details there, your salary, existing pension values, when you want to retire, how much you're contributing towards your pension, and then it'll generate a result telling you what you might expect to get in retirement. So it will give you a total value, and that will split that value down into tax-free cash and an estimated amount of annual income after the tax-free cash has been removed as well. And that will give you a rough idea of whether or not you're on track for the retirement that you're planning for and hoping for. And if you're not, the sooner that you know that, the sooner you can start to make changes so that you can get yourself back on track and hit your objectives. So this last section of this webinar today, revisiting risk. So do think about how much closer you are to accessing your investments. And the sooner or closer you get to accessing your investments, it may well be the case that you want to start to protect those investments, reduce the chance that they drop significantly, maybe take a little less risk. Equally though, you might say, oh, I'm close to accessing it, but I'd rather keep it as risky as it is now because I still want that potential for growth. Just making sure that you're happy with the risk of loss there as well, because investments can always fall as well as rise. Consider whether you're happy with the amount of volatility that you've incurred thus far. Have your investments gone up and down quite sharply and unexpectedly? And if they have, are you comfortable with that? And if you're not, that's fine. That's an opportunity for you to change your investments slightly, make them slightly less volatile. And consider whether a drop in the value would affect your plans and how they might affect your plans. And if you're quite comfortable with the amount that you've got in there now, and a drop would really affect you, then consider whether or not you want to reduce the amount of risk that you're taking or not, as the case may well be. So we've covered quite a lot of ground again today, so hopefully you found that to be of help and of interest. 3 key things to walk away from this with, hopefully. So are you on track to meet your objectives? Start off by thinking about that. Secondly, do you understand the risks that you're taking? And if so, are you happy with them? And consider whether you want further guidance or advice with regards to meeting your objectives, whether that's just looking at some of our tools, speaking to our help desk, or speaking to the advisory services available to you. As ever, everything that we've covered today should apply to any of the investment accounts that you have with Hargreaves Lansdown. That includes the pensions, stocks and shares ISAs, lifetime ISAs, fund and share accounts, which are all available in that one HL portal, that one point of contact, giving you that wide range of investment options and choices. If you need further help, please do avail yourselves of our help desk and of our services. There's an excellent section on the website, on the Learn section. You can monitor your investments via the app. You can email us with any questions that you might have, and of course you can phone us as well. Thank you for listening in today. Please do take a few moments to read through these important investment notes, and do let us know if there's anything at all that we can help you with.